Can you actually afford a house for $120,000 in Washington? Well, today I'm going to dive deep. The real math, real numbers, and no guessing. I'm using two incomes, $120,000 total in Tacoma, Washington. Let's get into it. Let's go. Before we break this down and get into the dollar amount, I need you to understand that the ratio lenders actually use. It's called debt to income ratio. They also call it DTI. Now, most lenders want this total monthly debt, your future mortgage payment plus anything else like a car payment or a student loan to stay under about 36% of your gross monthly income. On $120,000 a year, that's about $10,000 a month gross. So your total debt payments need to stay under roughly $3,600 a month. Okay, so now if you don't have any other debt and that entire $3,600 can go towards your house payment, if you're carrying something like $400 a month for a car payment or something else, you're down to about $3,200 a month available for the mortgage itself. And that is exactly why the numbers shift between those two scenarios that are coming up next. So here's what actually translates to in home price. At today's rates, about 5.875%. Now you're gonna wanna know what the actual rate is at the time that you're gonna be pulling it, but for right now we're using that number. And we're factoring in taxes, insurance, and mortgage insurance where it applies. If you have no other monthly debt, an FHA with 3.5% down gets you to about $495,000. A conventional with 5% down, about $505,000. And a VA with 0% down, if you qualify, is about $511,000. Now, if you're carrying about $400 a month in debt, like a car payment, student loan, those numbers come down to roughly $440,000 for FHA, $448,000 for conventional, and $454,000 for VA. Either way you look at it, on $120,000 combined income, you're sitting comfortably above the typical starter home range here in Tacoma, which usually runs around $350,000 to $400,000. One thing worth noting before you go rate shopping is the lowest advertised rate isn't always the best deal. I pulled real life quotes recently, and the lowest one required paying almost $9,600 up front in points just to get that rate. So on top of your down payment and closing costs. So if you just compare the rate, compare the APR, ask what it actually costs up front to get there. And this is why shopping multiple lenders matters, not just picking whoever is the flashiest number online. Just because they give you the lowest rate doesn't mean you're gonna have the lowest payment. And so there's a lot of questions you need to ask, and going with a reputable lender is somebody that you're gonna want to go with. Now, just because you qualify for $500,000 doesn't mean you should spend $500,000. Here's just a few things I want you to think about. Number one, your down payment choice changes your monthly payment more than people expect. If you walk in with 5% instead of 3.5%, it lowers your mortgage insurance and your monthly payment, even though the price you qualify is similar either way. 2, Washington's down payment assistance programs aren't just for people who can otherwise afford it. Even at $120,000 income, using a program like the WSHFC bond can help you preserve cash reserves instead of draining your savings on day one. And buying below your max qualifying number gives you breathing room for maintenance, for rate changes if you're in an adjustable rate mortgage, or for life happening. So on $120,000 combined household income, you're realistically looking at $440,000 to $510,000 range, depending on your down payment and your existing debt. That's real buying power in this market. If you want to get into numbers that are actually yours and not the examples that I have here, I've built a guide that you can work through. It's got down payment assistance programs, real numbers, and what you can actually afford. And that's included in the description below. Or if you'd rather talk to me about your situation, book a call. The link is down below in the description. Until next time, remember, wherever you are in your journey, I'll be right there along with you.